Hi, my name is Pradeep. In this video, I am going to explain you the theoretical concept about the new asset accounting. So which is of course we are going to follow in S4 HANA Finance. How it is different from your classic asset accounting which earlier we were following in SAP ERP or in ECC. And we are going to see we will do a comparison with your new asset accounting and the classic asset accounting, not only theoretically, in different scenario. What are the new features are introduced here? What are the old things or the manual things earlier we used to do not required? How the period and activity is now simplified? How the reconciliation activities are not required, and we will see the practical documents also. So I hope you will like this video. Let's start. So for example, we have two depreciation areas. One is your company law point of view, which is your book depreciation, and one is for any other accounting principle, tax depreciation. So two depreciation area. But although we got here two depreciation areas, or maybe you can take a any other accounting principle wise depreciation area, but still here we are completely dependent on the book depreciation. Any other depreciation areas, if you are going to maintain, those are only for the informative purpose. For example, if you are going to add here depreciation for the group currency. Okay, so group currency is not the right example. Any other accounting principle wise, if you are going to maintain the depreciation, so all are your depreciations only provide you the information. But if you want to, like if you have, let's say, non-leading ledger is activated, then maximum you can calculate the depreciation separately by using the non-leading ledger. That is possible. Otherwise, it is only informative purpose. Or technically, I can say there is only one real depreciation. So this one is your real depreciation and all are your dependent depreciation. Now as here only one real depreciation is there, so maybe let's say here you are using one depreciation method, life of the asset is let's say 10 years, here life of the asset is 8 years, so definitely you will find the delta depreciation. So you have to calculate the delta depreciation, and that delta depreciation we need to, in period end, we need to adjust with your APC value, with your asset value, right? So that also we will, so that means we need to maintain, if you have multiple depreciation, although we have multiple depreciation areas, but as there is only one real depreciation, so then we need to maintain the delta depreciation. So how this one is simplified in S4? First of all, in S4, there is, we are going to, like ledger approach is the mostly dependent. You can continue with the accounting approach, but mostly 99.99% we are dependent on the ledger approach here, because here we we are not going to use only the multiple ledgers. We have the option, we can assign the multiple accounting principles also. So that is why. And second thing here, like same example, if you'll see now, as many as depreciation area if you want to take, you can take it or you can add it, and all your depreciation areas are real depreciation. First let's see this one in the ECC. And before going to work on the new asset accounting, make sure that your new GL configuration must be there, because without new GL configuration we can't work on the new asset accounting. Okay, now see here. This is not 4.7. Even if we'll go to the 4.7, then there is no concept of ledger. This is new ESP 7. So here the new GL part is there, and first let's see here how many depreciation areas I have included here. So I have included one book depreciation, I have included one tax depreciation. Ignore this one for the time being. I have included here one book depreciation 1 and one tax depreciation 10, but still I have to maintain here one difference or the delta depreciation. The reason is, now in ECC this is only one real depreciation. whatever the transaction you are going to post, not depreciation, acquisition, retirement, transfer, so everything is going to update in the book depreciation, not the other one, because we have only one real depreciation. Now see here, as per the book depreciation, the depreciation value is 41918. As per the tax depreciation, the depreciation value is 628. The reason is I have assigned here a different depreciation key and different multi-level methods. And the difference is I have added here in the I have calculated here by using the delta depreciation, and in the period end, before going to year-end activity, so I have to, or we can say as part of your year-end activity, you need to complete this one, ASKP. In the year-end closing procedure, you need to complete this one, ASKP. Once you will run it, ASKP, APC value will be adjusted. The delta depreciation or the difference amount will be adjusted with your real depreciation, that is with your leading ledger or with your non-leading ledger. So definitely here it will be the leading ledger we are going to use. This is one feature earlier it was there. Why? Because first we have to understand the depreciation area. These are my depreciation areas. Book depreciation with assigned with the ledger 0L, and you can see the category 1. 1 means real depreciation area post in real time. So all your transaction will update with this particular depreciation area 1, and everything will be updated. Depreciation area 10, 3. Either you can take this as only information purpose, and if you have activated the non-leading ledger, so maximum you can do the depreciation posting. So once user will run the depreciation program, so the depreciation value will be updated both the ledgers, leading as well as non-leading ledger. Area post only depreciation only, not only other transactions, only depreciation. So that is why we need to add here the delta depreciation. Fine. Now whatever I explained, all this delta depreciation concept is not applicable in S4. So this delta concept removed due to as all the depreciation areas now real depreciation. This is your ECC solution. This is your S4 solution. So in S4 HANA, there is no delta depreciation is required, because you are going to take all your depreciation areas real. So that means in ECC, this will be the real depreciation area. This is also real depreciation area. Fine. Now, there was another depreciation area is there, that is your group depreciation, and this is here also one group depreciation area is there. The concept of group depreciation or group currency depreciation, it is not mandatory, it is optional. If in any particular company code, if you have activated the group currency, then here you need to add the group depreciations. So let's see in this company code whether I have activated or not. This is EC settings. This is my company code assigned with the leading ledger. I have activated my company code currency. Also, I have activated my group currency. So that is why I have included in my depreciation area list one depreciation area as group currency. If any company code, if your group currency is not activated, then that depreciation area is not required. Clear? So depreciation area, group depreciation area, optional, whether it is required or not required depends on your settings or depends on your company code configuration. Now here one more important point is there. I have also activated the group currency for the non-reading ledger. Okay, so as group currency is activated, the group depreciation area also I have included here. Group depreciation area as group currency activated in company code. Right? In this company code, I have also activated group currency for the non-reading ledgers. Let me show you. Define activate non-reading ledger. For this non-reading ledger also you can see group currency is activated, but still system is not asking, or we no need to define a group currency for tax depreciation also. So this group currency which is activated, group depreciation area for your book depreciation, not for the tax depreciation. Answer again same, because here only one real depreciation is there. So you need to activate the group currency for real depreciation. So as in S4, so as per this point in S4, as we have activated multiple real depreciations, so do we need to activate the group currency for all depreciation area? Yes, you need to activate the group depreciation area for all real depreciation. So that means you need to activate the group depreciation for book depreciation, you need to activate the group depreciation for tax depreciation. This is another important point. So no delta depreciation and group currency depreciation is required for all the ledgers if group currency is activated in your company code. Okay, so this is another important point, or delta point we can say. One more option was there, like this is also one important area. The reconciliation is mandatory. Manual reconciliation is mandatory in the ECC system. What is reconciliation? First let me explain. Suppose I'm going to post one acquisition entry. So when we are going to post the acquisition entry, your accounting entry posted as asset debited, accounts payable, or vendor credited. And with this, I'm expecting the asset related document should be generated. That means the document type AA should be there. This is your asset posting. Now in this company code, let me check how many asset documents are there. Document type asset, run it. So I can see here only one asset related document is there, 10004. Now let me check the GL line item. So here you can see one asset related entry is there. Okay, this is your asset entry is there. Vendor credited 31, asset debited 70, but I can't find here a asset document. This is only the operation document is generated. So you can see the document type is KR and the document number is also KR series. Asset document is not yet generated. Or I can say now the reconciliation between ledger and the asset, it's not yet completed. So that is why earlier when you will perform the asset acquisition, whether it is through direct purchase or it is through integrated with your So in both case, this entry will update. So only the operation document, somewhere you will find KR, somewhere you will find RE, but it is only the operation document is going to update, not the asset document. That is why we have one step was there in the year end, that is ABST2, reconciliation of your asset and GL. We need to do it manually, or user need to do it manually. So before closing the books of accounts, you need to complete, or you need to run this one year-end closing process as your accounts reconciliation, ABST2. So once you will do this ABST2, then only we are going to reconcile the asset entries. Now this one is not required, or this concept is removed. So in ECC, we have the features like ABST2, which is your integration, GL and assets, removed due to the technical clearing account. So what is this technical clearing account, and when, how we will configure, what is the use, all this once I will come to the configuration we will see. So due to the technical clearing account, it is also not required, or I can say reconciliation between GL and the asset, it is by design now. So no reconciliation step is required for the financial closing purpose.
To understand that reconciliation account, or that technical clearing account, so let's take one example. So you can see here, this is one APC account, and let's take this document 10010, and you can observe here what is the document type, AA. That means here when we posted the document, operation document, directly you can see that the reconciliation or the asset document type is already updated. For better comparison, let's see first the ECC. So this is your ECC system, and here I posted one document, same acquisition entry, but here you can see the operation document is updated. So this is my KR document, document type is KR, and 19,000 we know it is the invoice, vendor invoice document series. So that means here the operation document is generated. If I will go to the document in detail, so I can see here this is my operation document, entry view, and maximum I can get the GL view. So it is updated in my leading ledger. Same time, if we will check the entry here, accounting entry here, so here we have multiple documents are there. This one you can see, this particular document, if I will go in detail, how many documents are posted here. So one is your operation document. Normally when you are posting the acquisition entry, you will find that vendor is going to credit 31 and APC account is going to debit. So here vendor is credited 31 as usual, but this 2014 is not our APC account. This is the technical clearing account. So 2014, that means technical clearing account is first going to be debit, then it will be credit, and the corresponding debit entry will be transferred to APC. You can see here entry view, then GL view, and here good thing is that if you are maintaining multiple depreciation areas, so all are real depreciation areas. So you can see the accounting entry in the leading ledger, you can see the accounting entry in the non-leading ledger also. So here you can see the non-leading ledger entry is there, but this is nothing new, it is my operation document. Now if I will go to the asset document or asset view, see here, so asset document is already reconciled. So that's why I told you that if you are going to do the reconciliation, or reconciliation is not required, reconciliation is by design. So I have one accounting document for asset, for my leading ledger and non-leading ledger, and in my configuration I have assigned this leading ledger to my respective depreciation areas. So let's see this one. Now if I will go to my asset view, so this is my operation document, this portion, this is my operation document. So vendor credited and debited my technical clearing account. You can see this account is 2014 is my technical clearing account, this account is debited, and simultaneously automatically there is one asset document is posted with reference to this operation document 19,000. This document is asset document is generated. Now the previous credit entry 2014, now it's previously debit entry, now it is credited. So here, see here, it was earlier debited 70, now it's credited. So this one is nullified, and 2009 my APC account is updated. So this is how reconciliation is automated, or it's by design. No, OBST2 is not required. And similarly here I have activated two depreciation area. This is my one accounting principle. If I will go to my other accounting principle, you can see here same reference document is operation document, and my accounting entry is asset document is posted. This is my non-leading ledger entry, so N1 is updated with same document type. So that is how the reconciliation, but for of course you have to do the configuration, required configuration, but this is how we can avoid the reconciliation, or the old steps, the period reconciliations are not required.
Fine. One more. So one, ASKB not required because we are going to take all real depreciation areas. ABST2 not required due to something technical clearing account. Another one, no more dependency on depreciation area 01. No more dependency on depreciation area 01. So what is this depreciation area 01? Earlier, as I told, if you have multiple depreciation areas, but the dependency or the input value always on the real depreciation, in our case it is book depreciation. You can maintain multiple depreciation, but always all your input value from the real depreciation only. So you can check the settings. Specify transfer of APC values, specify transfer of depreciation terms. See here, depreciation area 1 to 10. Okay, so depreciation area 1, I have selected here 0. That means we can feed the information here, or this is your input value. But for the depreciation area 2, dependency on 01, but again it is your group currency purpose. But if you see the depreciation area 10, this one is also 01. That means it is dependent on this depreciation area. Even if let's say you have one more depreciation area here, so that will be also 01. So all your depreciation areas are completely dependent on the real depreciation or depreciation area 01. So same also here. Specify transfer of depreciation terms dependent on depreciation area 01. Now this one is not required because we have two real depreciation areas. So if you will configure this one in S4, you will take this as your real depreciation. You will take this as also real depreciation. Okay, this one is dependent on this one, and you need to add here one more depreciation area, that is your group currency for the non or this other depreciation area. So that will be dependent on 01. That will not dependent on 01. Okay, so this is another change you can say. So flexible concerning of the leading valuation. This is known as flexibility concerning of your leading valuation, or we can say no more dependency on the depreciation area 01. Okay, some more changes are there. So let's do this configuration step by step. First, let me explain what exactly we are going to do from the migration point of view. If it is a migration project where you have, yes, yeah, right. So now what exactly we are going to do from the migration point of view. When you are going to do the migration, first we have to understand from which system we are going to do the migration, whether it is a classic migration we are doing or from the new GL system we are going to do the migration. First, assume that you are going to do the migration from a classic asset accounting, that means in 4.7, where you don't have the new GL enabled. So as here new GL enabled is not there, mostly you will find your depreciation area book depreciation. So you need to add other depreciation areas also. Now what exactly we are going to do the migration point of view. So first we have to understand from which system we are going to do the migration. So migration point of view, we'll see you have to understand the customer's system, existing system. So customer's existing system, if it is classic asset accounting, then you will find only real depreciation because you don't have the multiple valuation. So other depreciation areas are not there. So only one depreciation area you will find here. Now, if we'll go to the S4 system from the migration point of view, no steps are there. It just migrate your chart of depreciation. Migrate from classic to new asset accounting. Migrate your chart of depreciation and activate your asset accounting. That's it. So it's not like only you need to do the two steps for the migration. You have to do some more configuration. So if you are migrating from the classic asset accounting, then you need to add all the depreciation, other depreciation areas. That means for the migration perspective, we have only one depreciation area is there, book depreciation. Now, after migration, you need to, this one is already we have, and you need to add the tax depreciation. Okay, if we are going for the parallel accounting here, because we are not going to use the accounting approach. Now, currency point of view, if in your company code, if currency is added, company code having the group currency, then you need to add here the group currency also. So this is your depreciation area 01. This is your depreciation area 10. You need to add here one depreciation area for the group currency after migrating. This one is already there in my system, but it is because it is a new GL enabled. I'm talking about if it is classic. So in S4, this one is a real depreciation. This one is also a real depreciation. Tax depreciation is also real depreciation. So you need to add the group currency for book depreciation, and you need to add the group currency for the tax depreciation purpose also. Group currency for tax depreciation. Done. Now, so this will be, let's say, 21. So in this settings, at least we need here 4 depreciation areas, because you need to add group currency, because in this case, in our settings, we have activated group currency for our leading ledger as well as non-leading ledger. Now in ECC, we don't have any option anywhere to add the accounting principle. So you can see here define how the depreciation will be posted. Nowhere you can add here depreciation non-leading ledger. So somewhere you can add the leading ledger, somewhere you can add the non-leading ledger. But again, if it is classic asset accounting, then ledger concept is also not there. But assume that if it is new GL enabled also, still ledger is there. But nowhere accounting principle is linked with this. Although we are saying that this is related to book depreciation, this is related to tax depreciation, but accounting principle is not there. That is why when we are doing the asset under construction, we are facing a lot of issues. Now that one is AUC is also now simplified. So we need to add here the respective accounting principles. Or we can say in this valuation, we need to add the accounting principle. So this is whatever the accounting principle you have linked with your ledger. So let's say this is related to IFRS, this is related to GAAP, or whatever, local GAAP. So you need to add the accounting principles. Okay, or simply I can say we need to complete, after the migration, we need to complete these 2 steps from our normal configuration. First, we migrated the chart of depreciation. Okay, so it's not there. We migrated the chart of depreciation. Then after that, you are going to define your depreciation areas. So here you are going to define your depreciation areas, and whatever the depreciation areas are missing as per the new settings, those you are going to add those depreciation area. Then you are going to add the area type. All this configuration I will do, just I'm showing how we are going to do the migration. So you're going to do the specify area like type settings you are going to do. Then once it is done, then you need to complete this step. You need to complete this step. Also, you need to complete the currency settings. These are not actually something new configuration. In ECC, these are already there, but here, as you migrated from the classic asset accounting, so you need to add those configurations. And if you have migrated from the EHP7 or new GL enabled, here these steps are already there, but you need to do some fine tune because now all the real depreciation areas are real depreciation. So that is why those settings you are going to add. So like currency you need to add, specific APC depreciation terms you are going to do, APC transfer values you are going to do. So here in this area, first you are going to do this changes. Yeah.
Thank you very much for watching the video. If you like the video, please hit the like button. Any comments, any query, feel free to put in the comment section, or you can mail me also. Thank you.